The 7th Pay Commission report is likely to be submitted to the Finance Minister on Thursday. Sources say pay hikes for central government employees may be frugal as the centre tells the Commission that its fiscal room is limited.
Cyrus Mistry charts a new course for Tata Motors in a major strategic shift. The company may stop commercial use of its passenger vehicles and phase out existing cars like the Indigo. May also incentivize dealers to stem their exit. That's an exclusive.
Jet Airways, Indigo and SpiceJet draw the wrath of the competition watchdog. The CCI slaps a 258 crore rupee penalty for allegedly colluding to fix fuel surcharge. SpiceJet and Jet Airways say they're not in contravention of the Competition Act and will appeal against the order.
It's the biggest investment banking deal in India in a decade. KKR buys controlling stake in Avendus Capital for over $100 million.
I still remain kind of optimistic that we would get to 8% this year.
The Vice Chairman of the Niti Aayog, Panagarya, is still optimistic about the 8% GDP target for the fiscal, says the government may shelve the 5-year plan and move to a 3-year rolling plan for the public sector instead. Cautions against aggressively levying safeguard duties. That's the CNBC TV 18 exclusive.
Demand for steel could go up, but prices will remain soft, says the top management of Tata Steel. Hopes Europe will support growth and rules out any further stake sale to ease the debt burden. That's an exclusive.
What got us here from the 1,000 crore to 5,000 crore journey, the next journey will not, but by doing the same things will not go to the next level.
Marico promises to correct past mistakes to move up to the next level, aims to transform 5 core segments to double revenues to 10,000 crore rupees by 2018. That's an exclusive.
79 people have lost their lives due to heavy rains in Tamil Nadu. Air Force undertakes relief operations. Ola applies boats as many parts of the state remain inundated with water.
ये ISIS का खतरा केवल किसी एक देश का खतरा नहीं है, बल्कि एक ग्लोबली एक चैलेंज है.
God willing, like France's and by God, as we struck France in the center of its abode in Paris, then we swear that we will strike America at its center in Washington.
Our coalition is intensifying our airstrikes, more than 8,000 to date. We're taking out ISIL leaders, commanders. They're killers.
We've taken out leaders. We've liberated significant communities, Tikrit, Baiji refinery, communities in Syria.
While Paris is slowly limping back to life after the brutal terror attacks, France is stepping up the offensive against the ISIS as fighter jets bombed strongholds in Syria, and Russia has now confirmed what many had feared. The passenger plane that crashed in Egypt was due to a bomb. Can the so-called Islamic State survive the onslaught from US, Russia and France? Good evening. Thanks very much for joining us on India Business Hour. Hi, Nantara.
Hi, Shri. Back to the French police carrying on raids. We've seen similar raids happening in Belgium, Germany, and the German police have today arrested as many as 5 people.
Well, that is right. We'll get you more updates from what's happening on the situation on the ground in Paris in just a bit. But first up, here's the action on the Loud Street today. Markets today in a volatile mood, but ended in positive territory. Major indices did swing between the red and green throughout the day, but managed to close with some healthy gains. The Nifty continues to hold about 7,800, gaining nearly 0.5%. The Sensex scoring a second consecutive century. It's now moving closer to 26,000. Mid-caps managing to marginally outperform the blue chips, with the index gaining over 75 points. So that's the action for the markets. And this is going to be a big one for the markets. It could boost consumption. It could give discretionary spending in the hands of the consumer. This is the top story this evening. It's a CNBC TV 18 exclusive. Central government employees may get their salary hike soon. Sources say the 7th Pay Commission is all set to submit its report to the Finance Minister this Thursday, but the pay hikes are only likely to be frugal. Sapna joins us now with the details. Sapna, has the Finance Ministry communicated its fiscal constraints to the Pay Commission, and has that really weighed on the Commission as it submits its recommendations to the government?
Absolutely. In fact, this was a major concern at the end of the government, particularly the finance ministry's end. They had indicated earlier to the pay commission that at the time of recommending the pay hikes for the central government employees as well as the pensioners, kindly keep in mind that the fiscal prudence should be adhered to, and the leeway, the fiscal room is very limited if the government so wants to, kind of dole out very generous pay hikes. So it seems as if, the pay commission might actually be able to follow some bit of that advice at least. So in terms of a very generous pay hike or a very generous kind of an announcement coming on that front, it's unlikely. Also, if you look at the kind of numbers that were there earlier for the 6th pay commission, they had recommended a 40% pay hike, which is like pretty steep. And we saw the results after that, the fiscal impact after that, not just on the central coffers, but also on the state government budgets. So keeping all of that in mind, don't expect any fireworks in terms of the pay hike announcement. The other important aspect, of course, is that keeping this in mind, the finance ministry is very keen to stick to the FRBM target, the fiscal deficit target of 3.9% for FY17, and most likely they are going to go on that front. It's unlikely that the FRBM roadmap is going to be tweaked again in the current year. The third aspect, of course, is that we are all aware of the fact that the pay hikes have to roll out from Jan 1, 2016. Finance Ministry doesn't want to take too much time in putting the roadmap out, basically from the next financial year onwards, because it don't want the burden of accumulated areas on that front. So most likely the allocations will be set out in the coming budget, and we will know what kind of number crunching the government will be doing at that point in time. Yes, revenues will be under kind of pressure, but so to speak, so will the FRBM target is not going to be kind of tweaked, at least as of now.
Thanks, Sapna, for joining us with that. So we will see the submission of that report later this week, and the Exchequer confident of still meeting the FRBM targets. Here's a big corporate story of the day. Tata Motors recently roped in the world's best footballer, Lionel Messi, as his brand ambassador. CNBC TV 18 now learns that move is part of a larger brand overhaul for the passenger car business. We understand Tata Motors is likely to stop the commercial use of the cars it intends to launch. Ranjay Banerjee reports Tata Motors plans to launch 8 new models by 2019.
Tata Motors hasn't had much success with its passenger car business, despite heavy investments in new car launches, including the world's most affordable car, the Nano. The company, however, is now making a fresh attempt at reviving its loss-making business. CNBC TV 18 learns that the company's steering committee, headed by Cyrus Mistry, has approved a new plan, which apart from launching 2 new car models every year up to 2020, has also decided stopping the commercial use of its new cars. Tata Motors will launch a new small car, Kite, next month, and sources say that the dealers may be asked to take bookings of the car only for personal use. A Tata Motors spokesperson declined to comment on this issue. Further, the company has now decided to invest its own funds into refurbishing its dealerships in an attempt to stem the flight of dealers from the company. In a response to CNBC TV 18, the company spokesperson said, and I quote, "We do not share specific investments made for our dealerships, but we do plan to expand our network to additional 200 touchpoints this year," unquote. The spokesperson further added that it plans to triple its dealership count to 1,500 from around 450 currently. Tata Motors will also be investing between 1,500 crore and 1,700 crore rupees on its new launches every year. CNBC TV 18 learns that the top launches would include an entry-level sedan, Kite 5, in 2016, followed by a new SUV, codenamed Eagle, in 2016, and X104 in 2017. Importantly, Tata Motors may also be entering the premium segment through an SUV codenamed X601 in 2018 and a premium sedan in 2019. Sources say that the aggressive plan under works could replace its existing fleet of products with new launches. The spokesperson of the company said, and I quote, "Phasing out a vehicle is a decision of the market. There are products which are 20 years old in the market and are still doing well. We will announce our plans as we go ahead," unquote. Only time will tell whether the latest bet from the country's largest automaker helps in boosting the volumes and enthuse its investors. In New Delhi, Ranjay Banerjee.
Well, that's the latest attempt from Tata Motors to try and revive its passenger car business. It has been struggling for years now, so of course new launch is part of it, and trying to resurrect the brand and disassociate it from the Tata Motors truck business. That's going to be a tough one, but that's the effort on within the company. Now, from one Tata Group company to another, while some of its peers continue to cry foul about dumping by Chinese steel makers, the country's largest steel producer, Tata Steel, doesn't want to get bogged down by the issue. It's focusing on increasing its production capacity, which it hopes will hold it in good stead as and when demand for steel picks up. CNBC TV 18's Archana Shukla caught up with the Managing Director and CEO of Tata Steel, TV Narendran, and the Group CFO, Kaushik Chatterjee, exclusively in Jamshedpur, and began by asking them what the domestic pricing environment looked like right now.
We are a bit positive on the demand side because if the government spends on infrastructure, which it's intending to, and if the GDP grows at 7-8%, the steel consumption should grow at 7-8% sooner than later. So we are more bullish on the demand than we are on the prices, because the prices will depend a lot on how much on the problems China has and how they're trying to solve those problems. As far as Tata Steel is concerned, what is external to us we can't control. We need to be prepared for all situations. We need to ride the down cycle well. And we focus on managing our costs well, managing the value that we deliver to customers and the realizations we get, and which is reflected in the performance, in some sense of the term. We've delivered on an underlying basis a 20% EBITDA margin over the last 2 quarters, which is the outcome of a lot of effort by a lot of people.
Do you think the challenges are now over as far as Europe is concerned post the restructuring? And when do you see that business come back to EBITDA positive?
So I think last year Europe basically makes its profit out of the margin or the spread between raw material prices and steel prices. Last year, 2014-15, it did have a healthy EBITDA margin, especially out of Netherlands, whereas UK had challenges because of a stronger pound, higher business rates and energy costs and so on, and a weaker demand. So I think in this particular year we've been seeing a significant amount of headwinds as far as the UK is concerned. However, we will work towards making Netherlands even more competitive, and that's the focus.
Well, that's Tata Steel hoping for the demand environment to pick up. Now, 3 airlines are facing the wrath of the competition watchdog. The CCI has imposed a penalty on Jet Airways, Indigo and SpiceJet for allegedly fixing fuel surcharge. SpiceJet has responded saying it will appeal against the order, as has Jet Airways. In fact, Jet Airways in its statement has said that it is not in contravention of the Competition Act and will appeal against the order. We haven't heard from Indigo Airlines just yet. Sindhu Bhattacharya joins us now with the details. Sindhu, so SpiceJet and Jet saying that they will appeal against the CCI order. Take us through the fine print of what the competition watchdog has had to say.
Well, the Competition Commission of India today issued an order saying it is imposing penalties upon these 3 airlines for, and here I quote, concerted action in fixing and revising fuel surcharge for transporting cargo. This is a 2.5-year-old case where a consortium of logistics companies under Express Industry Council of India filed an appeal with the Competition Commission, alleging that airlines were actually fixing fuel surcharge in consultation with each other and opposing any such move. The petition was actually filed against 5 airlines: Jet, Indigo, SpiceJet, Air India and Go Air. But in its order today, the CCI has exonerated Air India and Go and only fixed penalties for Jet, Indigo and SpiceJet. The penalties are 152 crore for Jet, 64 crore for Indigo and about 43 crore for SpiceJet. The Commission has said in its order that the penalty is at 1% of the average turnover of the last 3 financial years of each airline, and it has kept in mind the precarious financial position of the airline, which is why the 3 airlines are charged at different rates. We hear from our sources that each airline is expected to file an appeal against the CCI order because they say that an investigation report which was submitted earlier to the CCI for consideration had actually exonerated every airline, and they're really not able to understand what has changed between the investigation report and the final order. All the airlines may finally appeal under the aegis of Federation of Indian Airlines, which is a consortium which includes all private airlines. Back to you.
Thanks, Sindhu, for joining us. With us as 3 airlines that have been penalized. And speaking to CNBC TV 18, Vijay Kumar of the Express Industry Council, who filed the complaint against the airline, said his stance has been vindicated.
We are very happy that the Honorable CCI had ruled in favor of the complaint that we had taken to CCI. What we had alleged was that, when fuel prices were varying haphazardly, the airlines had introduced the fuel surcharge. Now, normally international practice is that the fuel surcharge is always tagged to a benchmark. There's an international benchmark where you normally tag it to that, and when the fuel prices go down, you lower the fuel surcharge. When the fuel prices go up, you increase the fuel surcharge. That was not happening here.
All right, so watch out for those 3 stocks: Indigo, the new kid on the block, SpiceJet, as well as Jet Airways. Now, it's the largest deal in the investment banking space in India in a decade. US private equity giant Kohlberg Kravis and Roberts, or KKR, has acquired Mumbai-based financial advisory and investment banking firm Avendus for $100 million. Kritika Saxena spoke exclusively to the management of Avendus to understand what the future holds. Take a look.
After an 8 years lull, M&A action in the Indian investment banking space is taking off. PE giant KKR has acquired a controlling stake in India's 3rd largest investment banking firm, Avendus Capital. Founded in 1999, Avendus will see its early investors, Eastgate Capital and Marico, sell their entire stake to KKR for $30 million. An additional $70 million will be infused into the company.
About 1/3 of the total deal size is a secondary transaction. About 2/3 is primary infusion into the company. The total transaction value is just north of $100 million.
The deal values Avendus at a little over $180 million, highest in the domestic investment banking space.
The deal, which is expected to be completed in 8 to 10 weeks' time, will see KKR hold a majority of 60% stake with an option to hike it up to 70%, and the current promoters of Avendus Capital, which includes the 3 founding partners, will have up to about 25% stake.
Avendus, which already has a strong investment banking business and has recently set up its wealth management business, will use the funds to expand in the NBFC space.
Where we're going to deploy most of the money coming in is essentially in creating a credit solutions business, of which NBFC is the first step. So we will essentially capitalize an NBFC. I think KKR is both in India and globally a very credible, strong brand name. They have also established a super credit solutions business in India. So we expect that with their insights and with the presence of some of the board members from KKR, we'd be able to create a high quality credit solutions NBFC business.
The team at Avendus is confident that the recent pickup in the IPO market and government's reform push will mean better days in the Indian investment banking sector over the next 2 to 3 years. In Mumbai, Kritika Saxena.
So that's the details of the largest investment banking deal in a decade. Here's the CNBC TV 18 exclusive. FMCG major Marico is entering its most ambitious phase as it looks to double revenues to 10,000 crore rupees by 2018. The company is learning from past mistakes and pedaling harder to innovate across the core segments of edible oil, hair and skincare products. Farah Bukwala Vora reports Marico has been forced to cut down prices of its flagship brands to shore up volumes.
They say failure is the best teacher, and Marico couldn't agree more. The maker of Parachute and Saffola brands candidly admits it has made several strategic errors in the past, but is now committed to learn from them as it looks to double its revenues to 10,000 crore rupees by 2018. In a challenging macro environment, Marico is undertaking an aggressive price-cutting strategy to notch up volumes and market share. It is also stepping up on innovation and is scaling up investments in high-margin categories while restricting investments in low-yield ones. Its core edible oil brand Saffola is underperforming due to high price premium and lack of innovation. In the second quarter of FY16, volumes were up just 4%, prompting the company to cut prices.
So what we did was, and I think that was something which we perhaps in hindsight didn't do well, in both serum and in the gel, we were market leaders, but the category penetration was low. So therefore, we ideally should have investment behind growing those categories where we are market leaders. As market leaders, it is our responsibility to grow these categories. Instead, perhaps we picked up in the more exciting category, which is Dio, which was very highly competitive. It was cluttered. The investments required is higher. And actually, amongst the three, it has the lowest margin also. And we put all our investments behind trying to grow Dio market share. And there was an innovation disruption that happened in the fog. The category changed from gas to no gas. As a process, those 2 years of investment didn't give us the yield.
Another area of weakness is Paras Pharmaceuticals' portfolio, which was acquired from Reckitt Benckiser in 2012 for 600 crore rupees. This includes brands Livon, Set Wet and Zatak across hair gels, serum and deodorants.
One of the things which we have done, started the processes, is that one we have done is selective price cuts. We have not done across the board price cuts because we need to protect a certain level of margin. Secondly, what we have done is we have started pushing some of the other entry point variants of Saffola, which are the affordable Saffola. And that should drive a volume growth. We are fairly confident of a much better performance in the second half of the year.
The company is now stepping up investments and innovations in the gel and serum category, even as it holds investments in the deodorant category. In its value-added hair oils category, the company claims to have successfully prototyped new advanced hair oils and is also looking to tap the 900 crore rupee anti-hair fall segment. Gupta says the company's endeavour is to grow volume share in value-added hair oils from the current 30% to 40% and value share from 20 to 23% to 30 to 32% by 2018. On the M&A front, Marico says it will continue to make a series of small-ticket strategic investments in adjacent categories that would boost sales in core segments. This would mirror its recent purchase of a 45% stake in Bellissimo Professional Products, a company marketing skincare products to salons. Internationally, Marico is hoping to reduce its dependence on Bangladesh and tap into Southeast Asia, South Asia and East Africa through the acquisition route. In Mumbai, Farah Bukwala, Vora.
Well, those were all the corporate headlines of the evening, but let's now talk policy. The Planning Commission is gone and a 5-year plan could be the next. That's according to the Vice Chairman of the Niti Aayog, which has replaced the Planning Commission. I spoke with Arvind Panagaria today. He's still upbeat about the Indian economy, believes that the economy can in fact achieve an 8% plus growth rate this fiscal. He's also cautioned against aggressively levying safeguard duties. Panagaria also telling CNBC TV 18 that he believes the system of putting a 5-year plan is likely to be done away with, though a final call has not been taken. He believes it's more prudent to move to a rolling 3-year system for the public sector. Let's take a look at that CNBC TV 18 exclusive.
Signals are generally positive, so I'm still awaiting for the second quarter growth figures. Let us see what they look like. But no, I mean, I still remain kind of optimistic that we would get to 8% this year. And certainly next year will be crossing 8%. I think, most of the pieces for India, actually, even in the discussions at G20, certainly, India was seen as perhaps the only country which was sort of the country with a relatively stable and high growth outlook. So, I mean, the Chinese also, by the way, the Chinese premier also said that, they were expecting growth of about 7% or so. So maybe that's a little overstated, but ours 8% remains feasible in my opinion.
Now, I ask you this in the context of what India, or at least Indian steel manufacturers, for instance, specifically are saying is that the government needs to adopt a more aggressive approach when it comes to the imposition of safeguard duties. We have seen some action being taken on that front, but do you believe that the need of the hour is to be more aggressive when it comes to safeguard duties and the imposition of safeguard duties to prevent cheap imports?
No, I think we need to be very careful in imposing the trade restrictive measures, of which safeguards is one, anti-dumping is another one. In cases where you see that there is import surge Steel was one such example where the government actually took the action. But by and large, we ought to be generally careful, because in the end, any duty imposed on one product could help that particular product, but it could then hurt the other products which use this product as an input. So even in the case of steel, right, it impacts adversely the industries that use steel. So we do need to be a bit careful. I think what perhaps is required, which I hope we'll try to take up in the next budget. At least we have to start the discussion when we begin to seriously discuss the budget. Come to rationalize the import duties a bit further.
The State Chief Ministerial Panel working under the Niti Aayog has also recommended that centrally sponsored schemes be pruned significantly down to just 30. Do you see that process starting with this budget? Do you believe that we will bring the CSS-sponsored schemes, that's the centrally sponsored schemes, down to 30 in the coming budget itself?
I would hope so. I can't tell you whether this will happen or not, because that's something that will be discussed over the next 2 to 3 months. But the Chief Minister's panel has made that recommendation. There seems to be some sense that this is a good recommendation. And so I would expect some rationalization beginning to happen in the coming budget. But that's again, not based on any serious information, because the discussions are just barely beginning on it. This is in part, you could say it's my hope that this will happen.
The Prime Minister has also talked about a much more dynamic way of policy making, of policy intervention. Are we likely to move away from the 5-year plan scenario? Are we likely to put another mechanism in place?
So that is something that will perhaps come under discussion quite soon, because the call has not been taken yet as to what the Prime Minister and really our governing council would decide on 5-year plans themselves. My own sort of sense is that it is very likely that we would move to some different mechanism instead of the 5-year plans. But as I said, the question is relatively open at this point. Officially, no call has been taken.
Officially, no call may have been taken, sir, but if you were to talk about a different mechanism, what could the broad shape be of that mechanism, sir, if you were to go away from the 5-year plan that we've been used to?
Sure. Right. So one possibility is the following. Remember that once you the 5-year plans themselves actually laid out a plan both for the private sector and the public sector. Now, when we were under the investment licensing and also in import licensing, you could sort of lay down a plan for the private sector. But today, really, the markets are free. Private investors are free to decide where they are going to invest, how much they are going to invest, and all. The government can really not quite credibly kind of plan for that. So I think it's a private sector planning which is what perhaps one would move away from if one were to actually discontinue the 5-year plans. Public sector issues, there I think we might still need some sort of plan. One possibility is some sort of 3-year rolling plan, midterm, some sort of medium-term macro planning, whereby you try to get some sense of what the expenditures and revenues are going to be over the next 3 years for each of the following 3 years, and then you also try to then project somewhat the likely allocations across various ministries, and there you can then begin to set targets or in consultation with the ministries themselves as to what they would achieve with the expenditures that they are likely to be allocated over a 3-year period, which then you can roll over as the current year passes. You add another year, subtract the current year, and then that also gives you a basis to assess, whether the ministries actually accomplished what they were supposed to accomplish or what they had actually agreed to accomplish.
So the Niti Aayog may do away with 5-year plans and instead come up with 3-year macro plans. Let's head down south now to Tamil Nadu. The rains have stopped but the misery is not. The death toll has gone up to 79. Our team of reporters across the state of Tamil Nadu get you the latest from the ground.
I'm in Muttumariamman Kovil Street off Kotturpuram. As you can see, people are wading through knee-length waters across this area. In fact, when I spoke to a few residents here, they said that the water was up to neck level till about last night. In fact, all these three-storied buildings, the ground floor have completely been submerged in the water, because of which these residents living on the ground floor have been safely evacuated to other parts of the city. In fact, we hear that rescue and relief operations were carried out throughout the day in this 4-kilometer stretch.
This is the place where 10 people have lost their life, including 4 children. Now, these books which are lying here filled with mud will never be used, as 3 of the children are from this house and they are no more. Their bodies have been received. 9 bodies have been recovered from this place, and a body of one lady is still missing from this area.
Water was around 2 feet maximum. In some of the other area, it is more than 3 feet.
For the past 2 days, this whole area is cut off, and no vehicle is coming inside.
I'm at the Krompet Government Hospital in Chennai, which was badly hit following heavy rains in the last few days. As you can see, I'm in ankle-deep water. In fact, last few days alone, there was what the medical staff was telling us, waist-deep water. This is the outpatient block where a number of doctors usually see their outpatients. But it will take several more days for this building and of course, several other areas to be completely sanitized.
Well, thankfully the weather has let off for the day, but it's been a day of rescue and relief as far as Velachery is concerned. Remember, this locality was one of the worst hit as far as Chennai's the Chennai floods were concerned. In fact, I am on a boat manned by the Tamil Nadu Fire and Rescue Services Department, and these gentlemen tell me they rescued nearly 1,000 people as far as Velachery alone is concerned. Let's remember that this is only for Velachery. Nearly 350 more such people were rescued in North Chennai, and a few more as far as the other coastal areas of Chennai are concerned. Let's remember that the State Disaster Relief Management Team and of course the Indian Navy and Indian Air Force have been conducting regular relief operations as far as southern parts of the city are concerned. These operations are well and truly on and look likely to extend well into tomorrow.
A massive effort there on part of all agencies, including the armed forces, to try and rescue people in the state of Tamil Nadu and coastal Andhra Pradesh. At this hour of distress, private app-based taxi aggregator Ola Cabs is also lending a helping hand. They're sourcing boats from fishing harbours to rescue people stranded in flooded areas. The boats will be used to provide food and water to people where there is basic supplies are unable to reach.